Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate jargon and uncover what is really going on behind those fancy filings. Today we're diving into NB Bancorp, Incorporated's latest report, and let's just say this one reads like a business love story or maybe a business marriage that just got finalized. So what is the big news? NB Bancorp Incorporated, or Needham as they're also called, has officially bought Provident Bancorp Incorporated and its bank, Bankprov. This isn't just a small acquisition, it is a merger that has been in the works and it is now complete. They wrapped this up on the 15th of November 2025. This is a pretty significant event for Needham Corporation. They are the parent company for Needham Bank, and they've just brought Provident and Bankprov into the family. Think of it like one big company absorbing another to become even bigger and stronger. The details of this deal are pretty interesting. Needham, through a special purpose company called Merger Sub, merged with Provident. Then Provident merged with Needham being the surviving big entity. After all that, Bankprov merged with Needham Bank. So it is a deep dive into corporate restructuring to get this deal done. Now, how did the people who owned Provident stock get paid? They had a choice. They could either get a certain number of Needham common shares, which is called stock consideration, or they could take a fixed amount of cash for each share of Provident stock called cash consideration. It is like choosing between getting paid in company stock or hard cash. So for every share of Provident stock, owners could get about 0.691 shares of Needham stock. This is the exchange ratio, and it shows how they valued one company's shares against the others. Or they could just get $13 in cash for each share they owned. This was a pretty straightforward decision for the shareholders. Take stock and potentially benefit from the combined company's future growth, or take cash and lock in a certain value right now. Looking at the numbers, Needham is expecting to issue nearly 6 million shares of its own stock as part of this deal. This means the existing Needham shareholders will now own a slightly smaller piece of the pie, a concept known as dilution. It is standard in mergers, but something to keep an eye on. What about those Provident folks who had restricted stock, maybe granted as part of their compensation? Well, all those stocks automatically became fully theirs, no longer restricted, and they received the same merger consideration as other shareholders. This is a common clause in these types of deals to ensure everyone is treated fairly. And for those who had options to buy Provident stock, those were also dealt with. They were cancelled, and the option holders received a cash payment equal to the difference between a set value, $12.69, and the price they would have paid to exercise their option. It's a way to cash out those options without the actual stock changing hands in this specific merger. Now, mergers often mean changes in leadership and new arrangements. Joseph B. Riley, who was a big player at Provident as CEO and director, has now joined the Needham board. This is quite common. Acquiring companies often bring in key talent from the acquired company to help with the integration and bring their experience to new roles. However, with this new role at Needham comes an end to his old one at Bankprov. Mr. Riley received a severance payment of $800,000 plus coverage for his Medicare premiums for a year. This is a pretty standard package for top executives leaving as part of a merger, often called a golden handshake. He has also signed a consulting agreement. For agreeing not to compete with Needham Bank or Needham and not to poach their clients or employees for 18 months, he'll receive another $250,000. On top of that, he'll be paid $27,500 a month for 18 months to provide consulting services. This ensures he shares his valuable knowledge while protecting the company's interests. Let's touch on Mr. Riley's background a bit more. He is a seasoned banker with over 35 years in the New Hampshire banking industry. He was even a co-founder of Centrix Bank. His experience is clearly valued, as evidenced by his new role on the Needham board. This kind of deep industry knowledge is often why acquiring companies want to keep key people involved. As with any big corporate announcement, there is a section on forward-looking statements. This basically means the company is talking about potential future events and outcomes, but they're making it clear that these are just projections and not guarantees. They are warning investors that actual results could be very different due to many risks and uncertainties. And the list of risks is quite extensive. It covers everything from general economic conditions and interest rate policies of the Federal Reserve to global capital market volatility, inflation, increased competition, potential government actions, and even cyber incidents. They are essentially saying, we think this merger will be great. But a lot of external factors could mess things up. They are particularly worried about the volatility and disruptions in global capital and credit markets, which makes sense given the current economic climate. Another significant concern is cybersecurity. They're worried about breaches in their own systems or those of their vendors, which could really disrupt operations. This is a huge risk for any financial institution today. So, what is the verdict on this Needham and Provident merger? On the surface, Needham is making a bold move to grow its footprint. The acquisition of Provident and Bancorp seems strategically sound, bringing in new customers and assets. The execution appears to be smooth, with clear terms for shareholders and executives. However, the extensive list of risks that Needham itself points out are very real. The banking industry is sensitive to economic shifts, interest rates, and increasing competition. The potential for cyber threats is also a constant worry. Mr. Relly's transition also shows how these mergers can involve significant payouts to key figures, which is a cost of doing business, but also something shareholders should be aware of. Ultimately, Needham appears to be strengthening its position, but they will need to navigate some turbulent waters ahead to truly realize the benefits of this union. Alright, that is our breakdown of NB Bancorp's latest filing. What is your take on this merger and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.